Well, good afternoon, everybody. I want to thank you for taking the time to, to tune into this webinar. This is kind of an important issue that we need to talk about. And the reason I consider it important is that every time I go to one of our regional symposiums, I always get a number of questions about tax-exempt status. Should we be a 501c19, a 501c3? What kind of documentation do we need to have of members' veteran status? And issues like that. So I think it's important, and I appreciate you taking the time to tune in. I also appreciate the leadership that you're providing to the military community by participating in chapter leadership positions. That's really, yeah, as you know, we consider the chapter structure to be an essential key element of MOA. It's the key to our influence up here on Capitol Hill, and it does a huge amount of very valuable work throughout the country on behalf of the military community. So thank you for that. I've got about 15 or 16 PowerPoint slides to run through today. They're not very detailed, and the reason they're not very detailed is because a lot of the issues associated with forming organizations are driven by state law and controlled by state law. So you could very easily have 50 different rules governing how to go about incorporating an entity and how to administer that entity after it's been established. So I tend to keep it fairly general. I will say that I've got a detailed outline that I put together that provides all of the citations to the websites that I'm going to mention and to some of the IRS publications and rules. And Brian Anderson here has graciously offered to send that out to everybody who attends this, so you'll have all of the details. The other thing, as Brian mentioned, we'd like to hold all the questions until the end. I know that's sometimes kind of cumbersome, but I think that'll kind of keep us on track and on time. So as you're going through the presentation and you have questions, make a note of them, and I'll take whatever time we need at the end to address all of your questions. So with that, I'm going to flip to the next slide. And there it is, and we're going to get started. What I'm going to talk about today are really four general areas. You know, what are the legal issues we're going to run into in chapter organization? What type of organizational structure is best for a MOA chapter? What are the steps involved in getting a chapter organized and properly established as a legal entity in your state? And then what are some of the common legal issues that we run into and that I've run into that people have raised with me whenever I've been out traveling and visiting chapters and at chapter leadership symposiums. To get started, let's talk for just a second about resources. There are some excellent resources out there to help you. And I'll tell you the key resource that you should always start with that I found is the most useful single place to go is the MOA Council and Chapter Policies and Procedures Guide. This has been put together over the years. It's been revised regularly, and it has a wealth of information that's really critical. It has, for example, samples of bylaws that you can use when you're getting ready to establish an organization. It has references to helpful IRS publications and IRS websites. So it's really, really an excellent reference. So whenever you're going to do something organizationally with a chapter, I would always start with the Policies and Procedure Guide. The other thing that's very useful is for your state, there are resources online that are very helpful. I don't know all of the organizational structures of all the different states that control corporations. Typically, the state will have a corporations commission, or it will be in the office of the Secretary of State for that state. And if you go to their website, you'll generally find those websites very thorough and have complete references to just about everything you're going to need, not just the laws and regulations that govern that area, but they'll also have samples that you can copy and modify to fit your chapter's requirements. Another helpful website is the Internal Revenue Service website. Now, I'm not one to compliment the IRS for much of anything, but I will tell you their IRS website, particularly when it comes to exempt organizations, which is what we're talking about, has got a wealth of information. It's very easy to navigate, and you can generally drill down to the specific area you need to address to get the answers that you need. And finally, I just want to take a minute to talk a little bit about the relationship between the chapters and MOA National. You know, sometimes it gets a little bit confusing, but it's really pretty straightforward. Chapters are independent entities. They're independent organizational creatures that are governed by and run by your local board of directors and your local leadership. They're self-governed. You determine the direction that they're going, and as long as you meet certain basic requirements for your chapter, it can be chartered as a MOA chapter. The MOA chapters are not part of the MOA financial structure, and they're not part of the MOA governance structure. So as a result of that, there's no group IRS exemption for MOA chapters. Some folks have mentioned to me that they know of veterans organizations that have kind of a group exemption or a group insurance policy that covers their chapters. And for those organizations where they do provide financial support and they do control the individual activities of the chapters from the national office, you would find those types of things. But because in MOA we respect the independence of our chapters and allow our chapter leadership to determine, you know, what works best for them and their community, we don't have that structure. So every organization and every chapter is an independent entity. Let's see here, Brian, I am at this point and it's giving me a message that I need to do something here. All right. Let's see. Move ahead here. Got it. Good. Okay. Getting started. The first thing you need to do is figure out exactly what you want your chapter to do. What's your organization's purpose? Because that's going to really determine what type of corporate structure and what type of IRS exemption you need for your organization's work. For example, you could do charitable or philanthropic work, and that would be things such as scholarships, maybe providing assistance to injured veterans or at veterans hospitals, or assistance to wounded warriors. You could be, the purpose could be to organize individual volunteer activities to help the community, or it could be to educate the public on issues that are important to the military community. So it could be any one of those things or any combination of those things that all fall under the charitable or philanthropic category. Another option is to focus on lobbying activity, directly influencing legislation at either the state or the federal level. Once again, this is going to make a difference in terms of what IRS exemption is the best fit for your organization. If you want to conduct lobbying activities, that can be conducted in a tax-exempt organization. And it's specifically covered for veterans organizations, but you need to decide up front if that's what you're going to do. And finally, you may want to consider doing just general community welfare work, you know, helping out the community, work at hospitals or at the schools, or maybe in some way focusing on a homeless veteran homelessness or some other problems like that. So depending on which direction you want to go is going to really determine what your best for your organization. Once you've kind of figured out what your purpose is and where you want to go with it, you need to define your mission. Sit down and draw up a good, clear paragraph, maybe 3, 4, 5 bullets, what your organization's mission is going to be. And that's going to be critical going forward, that you have this defined early and very clearly, because that will assist in terms of pigeonholing you in the correct IRS tax-exempt status. It may assist you in getting some state relief, and it will also define the scope of your. One of the critical things about exempt organizations is the purpose needs to be very, very clear. In the future, they need to operate within, and then they're protected as a tax-exempt organization. If you go beyond the authorized purposes that are laid out in your articles of incorporation, then you run the risk of not maintaining tax status and finding yourself in some difficulties with the IRS or with your state tax authority.
We are getting a little bit of feedback for new people that came on. If you could please mute your system as you come in. We are getting feedback from some of the new participants. Thank you.
The next step in looking at your organizational structure and designing your chapter organization is to identify your field of membership. As most of you know, we do have a requirement in the MOA bylaws that individual chapters contain a provision in their bylaws that their members will be MOA national members. Now, this is not something that's strictly enforced or is an absolute letter rule, but in order to be chartered as a MOA chapter, you have to have a requirement in your bylaws that your members will be MOA national members. And you want to make sure that you define in your bylaws exactly what your scope of field of membership. MOA national members, current, former, retired officers and surviving spouses, and spouses and family members. A number of chapters have some very, very broad fields of membership, and that's fine if that fits your activities and what you're trying to do. But you want to make sure you identify that up front so you have that worked out in your organizational documents. Now we get to kind of the more technical part of it. What kind of organization is best? And basically there's three general categories of organizations we want to talk about. The first is an unincorporated association. And what an unincorporated association is simply a group of individuals who have a common purpose or goal. They don't have to have any formal organizational documents. They could be a bunch of folks who just get together and pool their money and have a little golf tournament every Saturday morning, split up the winnings over a beer after work and afterwards, and they're done with it. Or it could be more formal and more structured. Generally speaking, you don't need an IRS employer ID number, but if you're going to open a bank account in the organization's name, you will probably need that IRS employer ID number then. The unincorporated association, one of the benefits of it is that it's very easy to set up and establish, very informal, no cost involved at all. It's very easy to do. The major drawback is that individual members of the association, and if there's any officers of the association, they could be personally liable for the association's debts. For example, suppose you were to reserve a restaurant for a lunch and you had fewer people show up than you had guaranteed. Well, if you're an unincorporated association, the officers and individual members of that association could be held personally liable for those expenses. The second option is to establish a not-for-profit or what we call a non-stock corporation. This is a corporation that's not owned by anybody. There's no shareholders, and it serves public-approved purposes as a not-for-profit organization. It's a separate legal entity. It has a specifically defined purpose. It has to comply with state law and IRS tax exemption requirements. The bylaws will govern the detailed governance procedures, when it's going to meet, when it can conduct business, and who is authorized to incur debts or to bind the organization in external business dealings. The advantage of having a not-for-profit corporation for a chapter is that the members and officers are generally shielded from personal liability. There are some circumstances where they potentially could be liable, but for the most part, having the corporate entity established under state law and conducting business as a corporate entity shields the officers and members from personal liability. For this reason and for a number of other reasons, this is the form of organization that's recommended in the Policies and Procedures Guide, and there are some very, very useful hints on how to go about setting it up and structuring it. There are a couple of other organizational options. For example, some states permit not-for-profit organizations to be formed as limited liability companies. You could also come up with a form of partnership arrangement for those. Generally speaking, though, these alternative arrangements are not going to work well with a MOA chapter. For example, you couldn't do an S corporation, or you couldn't do a for-profit corporation, because one of the requirements is for a not-for-profit organization is that you have no owners, and you have no personal endowment of anybody obtaining profit or funds as a result of the organization's activities. So generally speaking, these other organizational options usually don't work. I generally recommend using a not-for-profit corporate structure that's authorized by your state. What are the steps that you go through in getting your organization up and running? Well, there's a number of different ways you can go about doing this. You can start with the name, you can start with the directors, but whoever the people are who are really interested in pushing this ahead, need to sit down and choose who are going to be our initial directors. Most states require you have at least 3 initial directors to get incorporated. Then you need to decide on a name. One of the key issues in deciding on the name is whether somebody already has that name registered and is using it. Most states allow you to do the research for a name on their state corporation commission website. So you can easily go to the website on your computer. You can plug in the name to see if anybody else has it, and if it's open, then it's available for your organization. You also are going to need to obtain an IRS employer identification number. This is very easy to do, and it happens very, very quickly. You just need to go to the IRS website. You'll see there's a section where you can click on a link for the employer ID number, and you put in the basic information about the corporation that you're going to form, who the incorporators are, address of offices, and those types of things. Very quickly, within a day or two, you will have a letter back from the IRS giving you your employer ID number. And the employer ID number is critical for getting your articles of incorporation into the state and getting them approved. It's critical for bank accounts, and it's critical for other things that you may need later on, such as insurance. You're going to need to prepare articles of incorporation. Once again, your state corporation commission or your Secretary of State's office website will have examples of how you can do this. Many states, this is a fairly simple form where you fill in the blanks on your corporation's purpose and who the incorporators are, and it can be done in pretty much a summary fashion. Other states require more elaborate articles of incorporation, but generally speaking, the states have very, very good detailed instructions on their websites about what needs to go into the articles of incorporation. You will also need bylaws, and the bylaws are the rules that govern the internal operation of the corporation, and there's a great example in the Policies and Procedures Guide, which with a little bit of tailoring can fit just about any chapter anywhere in the country. Then you're going to need to hold an organizational meeting with your initial board of directors, set up a corporate record book, and maintain your corporate documents on a regular basis. So you always have evidence of all your business transactions, the corporation's earnings, and any outlays the corporation has made, during the course of business. So that's critical as well. Now we get to the point where a lot of people have questions about exempt organizations and the different categories of exempt organizations that the IRS recognizes. I'm only going to talk about 3 of them. And the first one is the 501c19 Veterans Organization. This, in my opinion, is the best form of exempt organization for a MOA chapter. What it does is it permits lobbying by the organization, and any income that comes into the organization is tax exempt. Within the 501c19 category, there are really 2 basic types of veterans organizations. The first one is what I call the basic veterans organization, and the requirement for the basic veterans organization is that at least 70% of the members of the organization need to be veterans. That means they need to have served in the United States Armed Forces on active duty for some period of time, other than for pure training, and if 70% or more are veterans, then it qualifies as a 501c19 organization. In addition to the 70% veterans, at least 97.5% must include veterans, the 70%, but also widows, cadets, and midshipmen. No more than 2.5% of the membership can be members of the general public who have no military connection. So it's really a pretty favorable status. Most of our chapters easily qualify for that. And I might add that the record-keeping requirements are not as rigorous for a basic veterans organization, a 70% organization, than they are for a 90% organization. Let me talk a little bit about the advanced organization. For the more advanced organization, that's an organization where 90% of the members are war veterans. And war veterans are a subset of veterans generally. War veterans are those veterans who have served during a period of wartime. And in the IRS publication governing veterans organizations, which I'll provide you a copy of, or I'll provide you a reference to later, it's IRS publication 3386, it specifies the exact periods of time that somebody needs to have served in the military to qualify for a war veteran, as a war veteran. One of the benefits of having a 90% war veteran organization is that not only is the income tax exempt to the organization, but donations and contributions to the organization are tax deductible to the members making them. So that's a real advantage. But I will tell you, given the number of auxiliary members we typically have in our MOA chapters, it's generally difficult for a MOA chapter to meet the 90% rule. For example, MOA nationally does not meet the 90% rule. So that's why dues to MOA and contributions to MOA itself are not tax deductible. The other thing I might add about the 90% war veteran rule is that to claim that status, the IRS requires that you have more rigorous record keeping than a 70% veteran status. For example, I have heard that the IRS is requiring organizations who claim the 90% status to maintain copies of their members' DD Forms 214, so they actually have proof of their members' wartime status. All of the organizations under 501c19, whether it's a 70% organization or a 90% organization, is authorized to lobby. And lobbying is the direct contact with legislators or public officials to influence their official action. And they're also required to be nonpartisan. And what nonpartisan means is that you can't support a specific candidate for office, or you can't support a specific political party. You can, of course, lobby on issues, but you can't, for example, campaign on behalf of a particular candidate for public office. Now, let me go to the next organization, which we encounter on a fairly regular basis with MOA chapters, and that's a 501c3 public charity. Now, public charities tend to serve some public community or public welfare purpose. For example, the MOA Scholarship Fund is a 501c3 public charity. We recently established a new MOA charitable foundation called the MOA Military Family Initiative. That's a 501c3 charity. One of the restrictions on 501c3 charities is that no substantial resources can be used for lobbying. So there is a major restriction on lobbying. And, you know, what does that mean? Well, the IRS isn't really too clear about exactly what substantial resources are, but it's kind of on a sliding scale. If you had a really small organization that didn't have very many assets or revenue, if you used maybe 10% of its resources for lobbying, you'd probably be okay. But if you had a huge nationwide organization, let's say like AARP or something like this, and if they were a C3, that's not a C3, that's actually a C4. But if it were a C3, then it wouldn't be 10% because that'd be a huge amount of money. It might only be 1 or 2% for a really large organization. Just kind of depends on the size of the organization and what type of resources it generates year in and year out. With a 501c3, one of the big advantages of that organization is that contributions to the organization are tax deductible to the individual making the contribution. So you have both tax exempt status for the organization and tax deductibility for the individual making the donation or paying the dues. Once again, as in the case of the 501c19, 501c3s have to be nonpartisan. Now, the other common IRS exemption that we run into is the 501c4. The 501c4 is a category for organizations that serve the general public welfare of a community or a segment of the community. Lobbying by the 501c4 is authorized. It's tax exempt, but like the C-19, the contributions are not tax deductible. An example of this is, most of you are familiar with Voices for America's Troops, which is the subsidiary we established shortly after I came to MOA, which allows people who don't qualify for MOA membership to join in our cause and to support our legislative objectives. So the 501c4 is out there as a possibility, but to put this in perspective, the best organizational structure we think for a MOA chapter, for the most part, is a 501c19 veterans organization. Okay, let me just kind of touch on some other tax issues here. How do you go about getting your IRS tax status? Once again, go to the IRS website and you'll download the IRS form 1023 or 1023-EZ if you qualify for the shortened form, and you submit that to the IRS. It's a fill-in-the-blanks type of form. It requires all the detailed information about who's forming the corporation, where it's located, what its IRS employer ID number is. It needs a copy of your articles of incorporation, your certificate of incorporation, and your bylaws. So that's really critical. I will tell you that when I first joined MOA just almost 5 years ago, when we set up Voices for America's Troops, we got that established by the Commonwealth of Virginia, and then we submitted our Form 1023. And about 6 weeks later, we got the form approved and back from the IRS. Just at the end of 2013, we organized the MOA Charitable Foundation and submitted the 1023, and that took almost 5 months. And the reason for that is there was a lot of concern over political influence in the IRS exempt organization office, and as a result of that, they've had to go in and move some people around and change their internal procedures, and it just takes a lot longer to get that exemption approved than it did before. But the good news is you can go ahead and operate your organization, and when you ultimately get that tax-exempt status letter, it is retroactive back to the date of incorporation. So it will cover you for donations that were received prior to actually getting the IRS letter. The other thing you need to keep in mind is you may have some state tax exemptions that apply, and you need to apply for those. And the other thing that's critical is in some states, and in virtually all states, if you're soliciting funds, you're going to have to register with the state. For example, our scholarship fund is registered in all different states, and we're registering our MOA Charitable Foundation in all states. So in the states where fundraising is going to take place, you need to be registered if you're a 501c3 and you're soliciting contributions. Otherwise, you don't need to concern yourself with that. Getting dues is not soliciting donations, so you don't need to have this registration requirement just for your members to pay dues, only if you are out doing fundraising. And once again, for any type of organization, most states require an annual report, and usually there's a fee associated with that annual report. It may be $25 or $35. It typically isn't very expensive, but the reports need to be done on a regular basis. The other report that you need to submit on a regular basis is your IRS Form 990 or the abbreviated 990 postcard that you can submit. And you need to do that every year. If you don't do that every year, there are IRS penalties that can apply, and you need to make sure that you get those requirements done. They're really important. Okay, here's some additional considerations that you might want to take into account. Once again, most states, corporation commissions, and Secretary of State's offices have very useful and helpful websites. A lot of times, if you can get somebody on the phone, the members of the staff can be very, very helpful to you and point out some things that you can do to avoid problems and to get your applications and your organizational documents approved quickly. The other thing is the IRS website and its publications are also very helpful. I use them a lot here at MOA National on a regular basis. The IRS publication 557 on the tax-exempt status for your organization, that goes through all the different types of tax-exempt organizations, not just the three that I've mentioned. And it kind of shows you what the similarities are and the differences between each one. And it's a useful guide to have on hand for anybody in a chapter leadership position. The other publication that I think is critical and particularly useful is the IRS publication 3386, which is a guide for veterans organizations. If you've got questions or concerns about what type of documentation you need to have on your membership, or what type of records you need to keep to satisfy the IRS, this publication is very, very useful to you and very helpful. Also, the IRS homepage has got useful information, as I've mentioned before, and then the homepage for the IRS exempt organizations branch is also very, very useful and very helpful. And rather than concern yourself with writing down all of these references and websites, we're going to send out a more detailed copy of my notes, which has all of these things specifically set out, so you'll be able to have a record of it. Once again, I can't stress this enough: the best single source for a chapter in organizational issues is So I strongly recommend that as both kind of your starting place and your finishing place for organizational issues involving chapters.